Welcome back to the NITE Economics YouTube channel, and tonight we're going to be looking at Bitcoin's price action to determine whether the bear market truly is over. So if you're liking the content, guys, please subscribe to the channel, drop a like, and without any further ado, let's get into tonight's video. So we're going to be focusing our attention here on the weekly chart. So if you could see this rally, this massive rally, which is just shy of 27% from the bottom to this wick here, it's 27%, and as you could see, Bitcoin's price action blew past the 21 exponential moving average pretty much without stop. It just blew right past it, and now it's finding some resistance here at the 55 exponential moving average, which coincides with our Fibonacci retracement, which is the spot 0.786 retracement level. So between the spot 618 and the spot 786, to me is a ripe area for Bitcoin to have a juicy rejection and essentially a fake out. So I think right now is a period to tread with caution. I think FOMOing in right now would be the wrong thing to do. And I think if you're a smart investor, somebody that has an eye for long-term gains, you know that maybe right now, maybe is not the best time to be getting into a position and probably waiting for Bitcoin to either establish itself above 82,800 and ideally above 100,000 US dollars would probably be a better time, because we don't know if there's a fake out here happening, right? I think there's a big potential for that to happen. That's why I think it's better to tread with caution. I mean, the time to add your position was down here in between the mid, not even the lows, but the high 50s and the mid 65,000 region. That was the time for you to start accumulating if you do truly believe that the low was in. I am not of that thought. I don't think the low is in, because we have seen time and time again in bear markets that Bitcoin creates its low, or the low is set in the Q3 or Q4 of the bear market, essentially. So your what's it called in the United States, the midterm year. In the midterm year, it is usually in Q3 or Q4 where the low is in, or you have a second low or the same low. So I am of the opinion that Bitcoin is to a minimum going to revisit the low set in July. But if you have seen my video, the Bitcoin bottoming formula, part 2 in particular, you know why I believe that Bitcoin's low could be somewhere between as high as 47,000 US dollars and as low as 38,000 US dollars. Although I think he'll be a quick wick down to that area before it recovers like the 60,000 range, right? So like I'm saying here, I think it's better to tread with caution. One thing that is very interesting about Bitcoin is that with this just shy of 27% move, we haven't seen a move like that in Bitcoin since August 2024. So about 1 year ago, where Bitcoin created a 27.47% move, but mind you, you see it's like it's a shooting star kind of formation, which, I mean, in this particular case, it didn't really mean much, because then Bitcoin went on to bigger numbers shortly after that, a couple of weeks after that. But again, I think in the bear market, it's better to tread with caution. As you can see, Bitcoin tends to trend up. You can see that from low to high, and again here low to high during bear markets, and it only trends down for very short periods of time. So things get boring in bear markets, and it was very boring for almost 2 months there. Let's see if we could see some examples here in bear markets where Bitcoin had a big move up and then essentially went back down. I mean, this is not the best example, but you could see within a week's time, mind you, the low was already in. So the low was already in, but essentially Bitcoin came back down and retested the 200 simple moving average, and it was a 30.75% move. But essentially the gains were given back. Within a couple of weeks, it retested its 200 simple moving average, but it found support. So it retraced. Sorry, I gotta take this magnet off. It retraced about 20%, like about approximately 20%. So this is why it's better to try to caution. I mean, Bitcoin it's currently above its 200 simple moving average, but I mean, I wouldn't be surprised if it like if the low is in, I wouldn't be surprised if it retests the 200 simple moving average, and right now it would be an 18% move. Mind you, if Bitcoin comes and bounces off of the 200 simple moving average in the next couple of weeks to come, if it doesn't completely break through the floor of the 200 simple moving average, it bounces off of it and it takes out this high, and ideally takes out this high and reestablishes itself above 100,000 US dollars in the next couple of months to come, I'm going to become super bullish to finish this year. But until that happens, I'm gonna refer back to the 4-year cycles, and Bitcoin usually creates a low sometime at the end of Q3, early Q4 of every midterm year. So every bear market usually lasts about 1 full year, and we're not there yet. So that's why I think people need to tread with caution. I know it's exciting right now to really jump in here, but if you're a long-term investor and you're thinking with your long-term investing hat on, you know that it's better to tread with caution, because price action never moves like this unless you're in a blow off top type of bear market scenario, in which case it's better to take profits. Like when you're in a situation like this, you know, okay, like things are getting hot, you see volatility exploding significantly. But if you look at volatility here on the weekly, it's 25. It's 25, and it's trending down. It's not even it's not tilting up. So that's another thing too, right? So I think it could drop all the way back down big time, and I think that was actually cause volatility to start expanding up here on the weekly. So it's actually still trending down, volatility. So I mean, I think that this move might be coming to its end, but again, like, we need to see what happens this week. This week finishes on Sunday, and we need to see it not being rejected, particularly here at the 55 exponential moving average. If it could establish itself above, close a weekly candle above the 55 exponential moving average, particularly get above this 82,814 level, and then we can start talking about it potentially taking out this target and getting above $100,000. Until then, like I said, I'm going to try to caution. I'm going to refer to the 4-year cycles, and I'm going to assume that it's going to revisit the lows later this year, if not get down to these levels, which I again cover in my video, the Bitcoin bottoming formula. So if you're interested in that, I'll leave that in the link or in these cards that you could click on. So again, guys, if you're liking the content, please subscribe to the channel. It's very helpful to get more eyes or more long-term investors like yourself and I, help navigate this market, particularly the Bitcoin market and traditional markets, as well as real estate, although I don't talk about real estate that much, but it is a market that I find super, super interesting, just because it's something a little bit different. And I think that when you're a long-term investor and you're trying to grow wealth, you need to have buckets of different assets that you invest in. I don't think that just being in one thing is the way to go. I think you need to be invested in different types of assets, and just always have an eye on the market to find good opportunities. Like I've talked about in my previous video about Netflix, and I think I've done a McDonald's video. I think also that's a good place to find some good value stocks into the future, but later on in this year. But anyways, I'll make some more videos about that. Again, if you're liking the content, please subscribe to the channel, drop a like, and I'll see you guys on the next video. Take care and bye.